Welcome to PhillipCapital's Weekly Market Watch. This week, we have Mr. Dexter Tan, investment analyst from Phillip Securities, who will share with us his view on the current market conditions. So Dexter, we have seen many interventions by regulators in the market. What do you think are the possible implications?
Okay, we see that the Fed has eased monetary policy, created funding facilities, and even taking stakes in companies recently. So this has effectively eased the London Interbank overnight rate, and funding pressure has eased, but it's still not effective enough. So the Fed is now resorting to buying mortgage-backed securities to help the end consumer. You can see that the Fed is really doing everything to salvage the weakening economy, and you see that the Fed is taking a more active role in the market. Well, regulators are meant to oversee the market, and this role that the Fed is taking on is unprecedented, and it's behaving more like a fund manager by buying all these mortgage-backed securities to encourage private funding in the market. So the TARP program is actually a troubled asset relief program. It's meant to encourage private funding. So I think the TARP program has short-term positive implications, but I think the longer-term implications are negative. I mean, why should private investors bail out companies when they know that the government is going to bail out these companies? In this sense, I think private money is not going to flow into these distressed assets.
Will government intervention help?
Okay, government interventions are violations of the concept of free markets. In the free market environment, there's the invisible hand which operates, which Adam Smith has spoken about. And this invisible hand is essentially a market balancing mechanism. By intervening in the market, you're disallowing the invisible hand from doing its work. Government attempts to save a failing market is counterproductive, as history has shown. There are recently two examples. First of all, you can see that OPEC is trying to save the oil prices from falling, and despite cutting productions by a number of times, oil prices have continued to fall. So the second example is in Vietnam, whereby the Vietnamese government has actually taken stakes in companies, and you can see that the stock market has continued to fall, and the Vietnamese government has also implemented trading bans and doing all kinds of measures to save the market, but eventually the Ho Chi Minh index is still lower from where it was when the measures were implemented.
So what is the general market outlook for next week?
Next week is Christmas, so there's public holidays, and trading volume is likely to be light. I think stocks are in a bottoming process. If you look at stocks for the past couple of days, they were not really sold off on very bad news. And if you look at the volatility index, it's gone below 50. Volatility is coming down, and value managers may pick up some names. And so there's some upside to equities, but I will not chase the rallies, as I don't think they are attractive enough.
If equities are not attractive, what other investments would you recommend?
Okay, within the bond space, if you look at sovereign bonds have rallied a lot. The 10-year yield has fallen from 3.32% to 2.07% in a month. So that has happened given the interest rate cut, and therefore bonds have gone up a lot. In the short term, I think these treasuries may move in a range, but I still think there might be some more upside to global bonds. I think high-yield bond funds are more attractive because the spreads are very wide and they are trading at distressed levels. I think credit is going to ease moving forward. The Fed is going to do everything to ease credit, and so therefore I think high-yield bond funds are relatively more attractive at this point. Commodities, I think some people are saying that energy prices are very attractive given that oil prices have gone below $40 per barrel and trading at about $37. But I think commodities might head lower first before heading higher in the longer term.
Thank you, Dexter, for your time today. With that, we come to the end of this week's Market Watch. Tune in next week for more market updates.